The easiest way to become a profitable trader is basically trading with the trend. But when it comes to trading with the trend, it could be a bit difficult, mostly as a total beginner, if you don't know what exactly to look for and what exactly to do whenever you want to trade with the trend. And that's why in this video, I'm going to break down a step-by-step guide on how you can actually trade the trend and trade it profitably. And this particular strategy is a fully price action strategy, which means that what we are going to do every single thing price action, nothing complicated. Everything is simple and straightforward. Now that I'm on my chart, here's exactly what we are going to do. The first thing is simply, once you come over to your chart like this, you need to first of all set a particular time frame that you want to trade. Note this strategy works on every single time frame, but personally for me, I have traded it more on the 1 hour and 30-minute time frame, and that's why in this video I'll be sticking with a 1 hour time frame. However, you can also do it on a whatever time frame that you actually want. And the next thing after picking the time frame is basically you need to insert one indicator that you have to duplicate, and the name of the indicator is simply the SMA, which is the simple moving average indicator. Now once you insert this indicator, here's a simple setting you need to do. You need to make sure that what you set your length to 200 for the first indicator, and then the second indicator you set it to 50. Now the reason why we are using 250 is simple. The 200 indicator tells us the longest time period of the market trend, which is the overall market trend, and the 50 moving average actually tells us when to actually go in, because it gives us our confirmation alongside a particular candle pattern that we need to look out for. Now with this in mind, I believe you've already set up your indicators already. Just set in the SMA, you can see it right there, simple moving average indicator. You set it up 50, one is set to 50, the other set to 200, and make sure that what you differentiate them like I did here. The 50 for me is the green color, and then the 200 is the blue. I use the green because it signifies when to go in and when not to go in. Let's take a look at our sponsors for this video. So guys, if you are looking for a reliable broker to trade, which is one of the most important things when it comes to forex trading, then I always advise you trade with Light Finance. They are one of the best brokers out there and has been in the market for 20 solid years. And apart from that, they also have one of the best trading interfaces that you can actually use. I personally trade with Light Finance when it comes to trading with brokers, because their trade execution is very fast and every single thing is smooth and straightforward with them, and they have a reasonable spread. Now that we are back on our tutorial, back on our chart, here's exactly what you need to do. Now once you have these two indicators set, because I'm assuming you've already prepared them on your chart already. Now once you have them set, the next thing is basically, in order for us to go in for either a buy or sell, we need to make sure that what these indicators actually follow a particular pattern. And here is the pattern. We need to make sure that what the 50 indicator, which is the 50 moving average, is below the 200. And why is it so? The 50 is a short-term time frame indicator, which means that what it monitors the market current short-term movement, which means that it's the best for us to actually take trade. Because if we have to wait for the 200 indicator, we might take the trade either too early or very too late. For that reason, we use the 50 for that. So basically, when we want to take a buy position, we need to make sure that the 50 is above the 200 and there has been a bullish close to that direction. And when we want to take a bearish position, we need to make sure that the 50 is below the 200 and then there is a bearish close downwards. Now, not to take too much explanation, let me play this candle forward and I'll show you a typical example. So now you can see that the 50 is gradually coming below the 200 now. So let's just play it and see. Now once it's coming below like this, we don't have to enter right at this point. We need to make sure that the market retraces back to the indicator before we actually take a trade. Now we just keep hoping and then keep going one after the other. Now you see this point whereby you can see the 50 came below the 200 and immediately a candle came to tap the 50 and they printed a bearish rejection right here. And you can see that this actually follows our entry pattern. Now basically when it comes to taking a trade, you need to make sure that if you want to sell, the 50 indicator is below the 200, and once it's below it, it doesn't mean you should just take the trade immediately. You need to make sure that a candle came really close to the 50 indicator, or at least tap it, or basically something just came close to it, and that gives you a bearish confirmation before you sell. And once this is confirmed, basically at the close of this candle becomes your entry. Now you see at the close of this candle here becomes your entry, so you place your entry right at the point there. Now since this becomes your entry, the next thing is basically your stop loss, which is very important. Now for your stop loss, I always advise you place a stop loss above both indicators. It should be some pip, like this is a perfect example. Now let me make this thing a bit brighter so you could see through it. Good. Now let me just reduce the opacity so you can see through it. Good. Now you see this is the 50 right here, which is a green, and then the 200 here. So in anything, you make sure that what your stop loss is above the 50 and the 200 whenever you're taking a sell position. So basically, whenever you're taking a sell position, make sure that what your stop loss is above the 200 indicator. This is because in case the market retraces, there's a probability that it will bounce off the 200 and then come back down again. Now after this, you can either go for 1:2, which is the best I would recommend, and 1:2 is okay when trading with this strategy. Why? Because in most cases your stop loss will be very huge. Now when trading with this thing, at times your stop loss might be really huge and at times it might be really tiny. But the truth is that what one thing I would recommend, regardless of the stop loss you use, is simply always aim for a 1:2 first. Now once the market gets into a 1:2, then you can consider extending. Like for example, if I'm to take this trade right now, in reality I'll mark this low here. I'll have this low here, and this low will be my actual original target, but then I won't make it my final target. I'll look at the 1:2 as well. So when the market gets into 1:2, then I'll decide whether I should continue holding or not. So now let me just adjust it back to 1:2. Now let's play it and see what happens from here. Now you see the market swept the 1:2 and then eventually came down to this final point. So guys, basically this is how you actually trade with this indicator. You need to make sure that what whenever you are taking a sell position, the 50 is below the 200 and there has been a candle tap on the indicator itself before you actually take it. When there's a candle tap and a rejection, it basically means that there's a strong selling signal at that point and you can actually go in. But until that is created, I'm sorry, just stay off the market. Okay guys, so here is a perfect bullish example that you can actually trade with this strategy. Now here is a market on gold. You can see clearly that what at this point the 50 came back to the 200 and then the market came, touched it, and they gave you a bullish close. You can see this bullish close. And now with this sort of one, you could actually go in as well. Like for example, in this sort of situation, you just take your buy from here, keeping your stop loss below this former bullish candle, and you could basically target a 1:2 easily. You see this one, you actually get it 1:2. You see when they are close like this, it's very easy for you to get good trading opportunity. But when the indicators are far apart, I don't really advise you go in such market. Like for this one here, I wouldn't advise you keep the stop loss right here. I would advise you keep it below this candle here. But then if you are a strong risk taker, keeping it below the indicator is also a good option. So guys, this is basically every single thing about this strategy. If you have any question regarding to it, just let me know that in the comment section, or join my Telegram community and you can basically ask me any sort of question directly. The community is 100% free. You don't pay to join. So guys, see you in my next video. This is all I have for you. Don't forget to use my recommended broker and Propfirm. The links will be there in the video description. This is a very simple strategy and straightforward strategy that anybody can actually trade, even a total beginner. All you need to do is simply have the instructions behind your head and take a screenshot of the setups that I actually showed you during the video. So guys, see you in my next video. Bye.